crypto prices pull back from the recent rally. Sylvia Jablonski of Defiance ETFs tells us why she's still, quote, completely bullish on Bitcoin. A new NBC polling shows 1 in 5 Americans have tried crypto.
That is not a retail stock. That is an institutional stock. It was one of the FANGs, still is, but it's all institution. And that's the upside and the potential of Bitcoin.
Welcome back to Wealthy Value. The US government has pushed a total of $9 trillion into the economy since the start of the pandemic. With tax dollars so desperately needed, the IRS is looking to crack down on cryptocurrency. But what if you could trade crypto tax-free? Here's how to do it in 60 seconds. Step 1. Open a crypto IRA account with our friends at iTrustCapital, the world's largest crypto IRA platform, with over $3.5 billion in transactions, over 1,500 positive reviews on Trustpilot, and no monthly fees. Step 2. You can transfer your existing IRA, roll over your employer plan, or make a cash contribution through ACH transfer, bank wire, or check. Step 3. Start investing. Available assets include not just Bitcoin and Ethereum, but also Cardano, Chainlink, Polkadot, and all major cryptocurrencies, as well as physical gold and silver. No taxable events mean no complex tracking needed, and security is the best in the industry. All digital assets are held in offline cold storage with the leading institutional custodians, Curve and Coinbase Custody, which are both insured and backed by the largest venture capital firms in crypto. Use our link iTrust.capital/value in the description below and get $100 in Bitcoin when you open and fund your account.
Yes, and that is not even a hyperinflationary case. Hyperinflation, we'd be talking about billions or trillions. Of course, the dollar would be essentially worthless at that point.
I think it's impossible to predict price or volatility. And obviously, the trend is your friend as far as Bitcoin's concerned. I think what affects price near term and midterm more than anything else is to get policy out of the US regulator on Bitcoin and stablecoins. The two that, if you read the Loomis bill, are really focus on Ethereum, Bitcoin, and stablecoins. And so that's interesting, because the fact is today, and I work in the indexing market where we try and index for institutions. I'll give you an example. If you're a sovereign wealth fund in the Middle East and you want exposure, some of these countries generate $250 million of cash a day, and they want obviously to get diversification. They already have oil, so they want the S&P 500 X energy. 2 years ago, they started saying, well, we're not allowed to own Bitcoin, but how do we get exposure to Bitcoin volatility? And at that time, the way that was really working was many companies had raised capital in the US markets that were Bitcoin miners, pure miners. They are awarded coins, they kept them on their balance sheet. And the theory was that if you owned the equities, you could get exposure in a legitimate way to the volatility. And indeed, if you look at the price of Bitcoin vis-a-vis, let's call an index of some of the popular ones, that would be Hut 8, Marathon, Riot, and Hive, which were very popular to be indexed. They really traded in tandem with Bitcoin. So it worked for a while. But that's why I talk about the 4 vectors. That correlation is going to fall off pretty quickly now that we have, for the first time, calls for carbon audits. Yeah, for as tragic as the Russia-Ukraine situation is, and as far as markets and investing go, I don't put much weight on it. I'll explain why. It represents less than 1% of the S&P earnings, no matter how you triangulate it. Obviously, these sanctions are unprecedented in economic pressure. And the fact that the Swiss actually shut down Russian accounts is also unprecedented. So there's going to be a lot of economic pain and misery inflicted in Russia. And my assumption, and I think the market, although many people won't say this, I'll go ahead and say it, Putin will probably end up in a hunting accident pretty soon. And that's because he's inflicting so much economic damage. And in addition to the misery he's, putting onto these Ukrainians. I mean, this is a Mussolini situation. I've seen this movie before. And it's okay if that happens to him. I think most people think that he's probably got long COVID or suffering from syphilis. Nobody really knows. But at the end of the day, it'll resolve itself probably sooner than later. And so that's one way the market looks at it. Now, as far as crypto goes, and Roy and I are obviously focused on that, I don't think that matters as much as this, what I call 4 vectors of policy coming at crypto right now. Let me walk just through the shopping list. This is also unprecedented. Number 1, you got the Loomis bill, and it's mostly positive. I've read it. A lot of positive policy in that. Number 2, you've got the executive order from Biden that says we must embrace this and regulate it. Also good news. It could have gone the other way. He could have said we want to make this illegal. Number 3, you've got the SEC talking about carbon audits, and I'll get to that in a moment. That just happened last week. And number 4, you've got this remarkable situation coming out of BlackRock, the world's largest money manager, decrying and talking about Bitcoin mining and carbon credits not aligning. And I think there's a lot of policy in all of that. But the fact that that's all happening shows you that crypto is never going away. And I think the more it gets regulated, the more institutional assets flow into this asset class. You can't say that it's a zero, as Roy pointed out. His scenario, when he talks about these extreme prices, is hyperinflation, 15, 20, 25%. I don't know if that's going to happen, but I am on board with him on the trend as your friend on pricing. I think the reason we own so much Bitcoin and Ethereum right now and 32 other positions is I believe this sector will be the 12th sector of the S&P, as you pointed out earlier. And I believe that you want diversification. When I own a sector like energy in the S&P, I have no position more than 5%. Well, I have 32 positions on. And my view is simply that Bitcoin is not a coin, it's software. Ethereum's software, Polygon software, Solana is software. All of this stuff is software. So I'm just investing in software development that has the potential to provide productivity, and the market will value it based on its scarcity in the case of Bitcoin, or the proposal of economic increase, like a Polygon, reducing fees and friction, and HBAR being used by Boeing for supply chain management. All of these different scenarios. I don't know which one's going to work, but I don't need them all to work. I just need a few to work, and I'm going to make a ton of money. That's the way I look at it. I see it as the number 1 destination for institutions that are allowed to index it when they can index it. They would be picking up 1% to 3% weighting if they could. They tried to do it, as I mentioned earlier, using equities that mine Bitcoin. And that's in a bit of turmoil because of ESG mandates. But Bitcoin itself will provide enough liquidity for an institution. And I would add this, regardless of what you think your target price is, if it does become an indexed asset, and I think once the SEC mandates it, it will, the volatility will decline dramatically, because what happens in an indexing model is when prices decline and your weighting is 1.5 basis points or 150 bips, you simply buy up to your 150 bip maximum. And when prices exceed that, then you trim back. But that provides tremendous stability for any asset. So you find that stocks that get indexed, or assets that get indexed, all of a sudden prices go up and stability becomes part of what their story is for a very long period of time. Now, I'll add that the Canadian regulator, specifically the OSC, in the last 2 years has been extremely enlightened. And what I believe, and this is a personal opinion, and I've said this before, but I believe that all the regulators talk to each other practically every day. But there's a special relationship between the OSC and the SEC, because they regulate markets that are so similar in nature. And so I believe that whatever is going on in Ontario has already been quasi-approved by the brethren at the SEC, and they're using Ontario and the Canadian provinces as guinea pig states to try these ideas out. And what ideas are those? The first ETF with the underlying asset, real Bitcoin. Yes, we can. There's no chance that we're going to be banning Bitcoin or anything else that holds economic promise in terms of developing new technologies for financial services and payment systems. That's always been the hallmark of American entrepreneurship. We're not going to ban that. Most of the engineers today that are working on these projects see tremendous potential, transparency, audit, everything. They provide so much upside that they'll remain going. But the one thing that's 100% sure is they're going to be regulated, 100%. But I'd argue that's good news. We get this regulation in place, the institutions will pour in trillions of dollars. Those that have been speculators like Roy and I will benefit from the fact that these will get indexed, and that will be a great upside. And then what happens after that is based on market demand, based on indexing. The majority of the ownership will shift to the institution. The majority of the S&P is owned by institutions. People think retail owns stocks. No, they don't. It's like Facebook. The reason it got crushed was that it got re-indexed from 5% down to 2.5%. And it took 4 weeks to flush all that out because of the new perceived risk on the metaverse and everything else. That is not a retail stock. That is an institutional stock. It was one of the FANGs, still is, but it's all institution. And that's the upside and the potential of Bitcoin. So the reason we're not going to be in a crypto winter again is that the last crypto winter had no possibility of policy or regulation. That is not the case today. There's enough believers that this regulation will be a good thing, watching these bills go through. It's very rare to see a bipartisan bill in today's Congress, but you have one here, which means both sides understand the merits of cryptocurrencies. And so you have a Ted Cruz, sitting right beside a Democrat, which never happens. And so I look at it and say to myself, that's one of the reasons there's a bid, an underlying bid on Bitcoin and other cryptocurrencies. Bitcoin 2022 came out of nowhere and has become the de facto global gathering of Bitcoin, the granddaddy digital asset. This year, it's going to run for 3 days. It's taken over the entire convention center in Miami where I live. That's a big facility. But what's remarkable, the first day, the 6th, it's all institutions and it's totally sold out. That has never happened before. That'll be 1,500 to 2,000 institutions from all around the world there to listen to different thoughts about where we're going with this thing. I'll be doing a keynote exactly on this ESG issue because it's top of the mind for everybody. I'm going to lay out the data I've got and we'll have that discussion, but it's institutions only. That is remarkable.